Hello, everyone, and welcome to the iFreedom Traders channel. Guys, I hope that you guys have watched the first video of this channel. If you haven't already, I hope that you guys watch it and join us for the 20% ROI challenge for the year of 2020. All right, now I'm doing this video just to share with you guys an analysis or a trade setup that actually, went in our favor on last week. What I'm going to be doing going forward is utilizing this channel to document the trade setups and then for the week, and then come back at the end of the week to see how those trades turned out. All right, whether in our favor or not in our favor, guys, this is for documentation purposes so that we can better ourselves as traders. All right, so without further ado, guys, I'm just going to go ahead and share the charts, get into it. This doesn't have to be a long video. All right, so sharing my screen here. All right, and the currency pair that we are going to be looking at on today is the USD versus the Japanese yen. All right, so the way that I trade, okay, is I trade with the trend. Okay, I trade with the trend, and what do I mean by that? All right, so for example, if I'm in a bullish market, okay, I'm looking for potential buy opportunities. Okay, where can I get in the market? All right, I may wait for a market to pull back. All right, so then I catch the continuation going up. But also what I've paid attention to is that there are certain reversals that we can catch as well, okay, if we understand reversal patterns or if we understand where the market currently is. All right, and so harmonics, which is what we're looking at here, this pink color, all right, harmonics is a reversal pattern. All right, and one of the things that I had recognized with this particular trade, let me just double check here, that when I look at the daily time frame, number one, I'm recognizing that the market is divergent, meaning that my momentum indicator is going down while price is still going up. That's number one. All right, let me check again on the 4-hour. Okay, you really don't see it here on the 4-hour time frame, but nonetheless, what I look for is an impulse within the market. All right, we got this move going up. We got essentially a double top. Market gave us a move down. All right, my momentum indicator shifted to indicate that the market is now bearish. All right, and so just so we don't cheat here, let's rewind. All right, and so because my market became bearish, you can easily see that this here is a pullback. If I go down to the 1-hour time frame, we get ourselves a pullback, and then the market continues back down. Now, this is when I check, or when I'm careful to see if the market is going to continue the trend here or not. All right, so I don't consider this a downtrending market just yet because it never broke the previous low. And then when I saw the market continuing back to the upside, okay, momentum is shifting to the upside. Now I say to myself, let me see about potential harmonic patterns that may appear, and this could potentially become, let's just say, a double top, okay, in the market. Again, remember, we were seeing divergence on the daily time frame. Okay, so remember, whatever happens on a higher time frame has to happen on a smaller time frame first. All right, and so let's go back to the 4-hour here. Now, I'm not going to go over harmonics right now and how to measure them, etc. I'm going to save that for those of you that truly want to know the specifics of the harmonic patterns, and we can go over so many different examples. Of course, yes, you can Google them. Yes, so you can do that. But if you want to know more, please just comment on this video, and then I can share with you guys how I learned how to trade harmonics. All right. So before we even pass the B, okay, this point here labeled B, I already have an idea of what harmonic pattern is going to be presented, or what harmonic pattern I am going to be looking for, okay, based on this X to A retracement. All right, so as we hit play, there's my play button here. All right, again, we see the momentum indicator has shifted. All right, now hit pause. Now this is my color coordinated system. Blue is my entry, green are my 2 take profit areas, and then red, the red line here represents my stop loss. Okay, now some people, and I'm not saying, guys, this is right or wrong, just your preference. Some people would have entered the market there. They would have entered a pending order, pending sell limit, okay, right here at 109.228, okay, 109.22, just because it's very beneficial, to be honest with you guys, where you can set a pending order, walk away from your phone, and just let the market do its thing. All right. One of the things that I discovered for me is that it really wasn't working with my personality on how I like to trade, because there were moments to where I would see a pattern, not really paying attention to the location that it's in the market, and I would just enter it blindly. All right. Now my system of trading harmonics has helped me to manage that risk, right? Where rather than taking 20 trades a week, I'm selective now, where I'm taking like 4 or 5 to reduce my risk or exposure to the market. I simply wait for a trend line break, okay, from my C to the D. Okay, I capture this trend, I draw a trend line, and I say, hey, I'm not entering this trade until the market breaks this current structure. All right, in order for it to reverse, it has to reverse from this leg. If the market continues to go up, then guess what? It's just invalid. You move on to the next one. Okay, so this has saved me a lot of times. Some people may say, well, Dwayne, that's very conservative. Hey, guess what? That's fine. You know, by entering the D, you know, that may be a more aggressive trade, but guess what? There are moments, I've seen it before, where the market will hit that level and never come back. So there may be some trades that I miss, but guess what? I'd rather be secure in my trading style rather than feel as if I'm guessing. Okay, so this is just adding confluence. All right, power of confluence, ladies and gentlemen. Number one, on the higher time frame, we saw the market was divergent. Okay, number two, we recognize a potential harmonic pattern here, all right, within the market. All right, and so then number three, as we continue to hit play, all right, now you see we got the trend line break. Market attempted to, market did indeed retest the high, and then it gave us a massive break to the low. Let's jump to a lower time frame and see what the market looks like. Aha. Here's another indication that the market was ready to turn to the downside, because again, we see more divergence now on a smaller time frame. All right. The market peaked the momentum here, and then you see the market, the momentum was going downward, while yet, if you look at the chart, your price was going up. Clear sign for divergence. All right, now let's look at some candlestick analysis. We're on a 1 hour time frame. Okay, right here you see a long wick to the upside. That's called right there a spinning top. You get an engulfing candle. Here's another, probably wouldn't call this engulfing, but a railroad candle, not perfect, but close to it. You get two dojis at the top. right here when the market was retesting that previous low before it made its way all the way down. So again, we would have felt confident in taking this trade. Wow, we got a trend line break. All right. Now, if you didn't catch that, we could have caught it here at the top where you're seeing these dojis. Market is hesitant to explode out of there. And then number two, ladies and gentlemen, what really intrigued me about this trade is that because we didn't take the trade here, we allowed the market to play out. By taking the trade up here, we reduce, or should I say, we increase our reward to risk ratio. Okay, what do I mean by that? So if we're looking to sell, let's say we went here. All right, we're looking to sell at the D. All right, let's just say we take this to take profit 2. All right, that's about a 1-to-1 risk reward ratio. Okay. Now, when we make the decision to take the trade, let's say here, all right. If you said, hey, at the trend line break, that's when you got in. Let's take it back up there. So this won't be in the way. Take profit 2. You're at about 1.7, 1.8. Now, if you took the trade up here near this double top, and let's just say we didn't catch the 2 doji, but we caught that bearish candle there. Let me zoom in. Right here, this bearish candle. We say stop losses right there. And then we take this back down to take profit 2. You just pretty much tripled your risk to reward ratio. Okay, now again, this doesn't always happen. All right, remember I did say that there are some times where the market will hit the entry point and just drop. But in situations like this, if you would have taken this trade here at the D, now you're in drawdown for several days versus you taking the trade here or here, you reduce your drawdown. And on top of that, you increase your profit. So this is just a simple technique that I utilize when it comes to harmonic trading so that I can increase, by using the same exact setup, I just increase my risk to reward ratio. So therefore, I'm increasing the potential profits that I can gain off of the same exact setup. Okay. And so then when we see this market play out, let me hit play. All right, we see that the market surpassed our take profit 2. Now, again, if you guys are just joining me for the first time, again, welcome to the iFreedom Traders channel. We hope that this channel is going to be very educational, very inspirational to you as well as Forex traders, also and crypto traders as well. Can't forget those. I hope that you guys go back and watch the very first video. I am doing a 20% ROI challenge for the year of 2020. And our goal is to increase our account by 20% per week. Now, let's look at this trade here one more time. All right, so we understand the method I use when it comes to trading the harmonic pattern. So let's just focus on the risk to reward and how important this one setup was. So if you're risking 5% per trade, or let's just say 5% of your account per trade, all right, and you found a setup like this, so regardless of the pips, you're still only risking 5%. So if I entered here, guess what? I'm just gonna enter a lower lot size so that the difference between here is 5%. Now, because I reduce the number of pips I will be risking, I can increase my lot size, all right? So now I'm only risking 18 pips versus, what's this, 23, versus roughly 60 pips. I can increase my lot size by almost 5 times the amount. So Now, with this one trade setup, and if we would have held it all the way to take profit too, ladies and gentlemen, with a risk reward ratio of 5.4, okay, rounding up, you just increased your account by 25% off of this one trade. Okay. So this is the reason why, guys, again, it's not more so just how to trade harmonic patterns, but just, guys, the power of confluence. All right. So let's just jot this out one more time. Okay, power of confluence. Number one, what did we notice? Okay, we noted divergence. Okay, on a higher time frame. Just say TF for short. Just note that it was daily. Okay. We went to smaller time frame. Okay, we noted impulse. I'll say bearish impulse. All right, for those of you that, again, as a reminder, we had a double top here, got our bearish impulse, we got a pullback for a continuation, but the market did not break this previous low. Okay, now based on how this market is choppy, it really didn't explode out of here. I said, okay, let me look for a potential harmonic pattern for a setup. All right, so now the harmonic pattern. And in particular, this one here is the Gartley. All right, so another reason to be looking for a potential sell. Okay, another reason to look for a potential sell. Now, as we allowed the market to play out, we did not enter at the entry of the harmonic pattern. We allowed the market to play out. Then we noted divergence. We noted divergence even on a smaller time frame here. So again, market, the momentum indicator was going down while price was going up. Okay, so let's note that as well. I'll make a TF. All right. Then, because we had the harmonic pattern, we can execute the trade, trend line break of the C to D leg. All right. We have our stop loss indicated based on the ratios of the harmonic pattern. We know our take profits based on the harmonic pattern. And now we just essentially allow the trade to take its place. All right. So rather than just taking the trade from a higher time frame or taking the trade just because you have a harmonic pattern, guys, we can utilize the power of confluence by essentially building our case, building our story as to why we're taking this trade. All right. So guys, I hope that this was very helpful for you guys. As we look for other potential setups, always remember the power of confluence. All right. And I promise you, we all will become successful and better traders for it. All right. Take care, everyone.